The American dream is to own a home. It has several economical benefits, including the ability to accumulate wealth, reduce housing costs, and build equity, security, and confidence. The National Association of Realtors did a survey, and what they found was that over 86% of the buyers agreed that home ownership is still the American dream, and so do I. But I want to share with you a little history that happened back in the 1950s. Well, prior to the 1950s, actually less than half of the country owned their own home. However, after World War II, many returning veterans used their benefits afforded by the GI Bill to purchase their home. So since then, the percentage of home ownership throughout the country has increased to the rate of 65%. Now that strong desire for home ownership have kept home value appreciating ever since. Now I want to take a look at this graph. Okay, this is the graph of home price appreciation since the World War II. This graph shows the only time house values have dropped was during the housing boom, which was between 2006 and 2008. So if you look at how home prices spiked prior to 2006, it looks a little bit like the current spike in prices in the past 2 years. So that right there alone might lead some people to be concerned that we're about to see a similar fall in home values as we did when the bubble burst. But I just want to alleviate some of those worries, and I want to just take a look at what happened the last time, which is during this period, to what's happening today. So what caused the housing crash 15 years ago? Well, back in 2006, foreclosures flooded the market, which drove home values dramatically. And the two main reasons for the flood of foreclosures were, number one, many purchasers were not truly qualified for the mortgage that they obtained, which led to more homes turning into foreclosures. And number two, a number of homeowners cashed in on the equity of their home. When prices dropped, they found themselves somewhat upside down, an underwater situation where homes were less than what the mortgage that was owed on the property. So many of these homeowners walked away from their homes, and this led to more foreclosures. So this also lowered the neighboring home values even more. So why real estate is different today? And here are two reasons why today's real estate market is nothing like the one we experienced 15 years ago. For one, demand for home ownership is real. It's not artificially generated. Running up to, 2006, banks were creating artificial demand by lowering lending standards and making it easy for just about anyone to qualify for a home loan or refinance their current loan. So today, purchasers and those who are refinancing their homes, they're faced with much higher standards from mortgage companies and anyone who's financing that loan. So there's a risk, always a risk when a bank loans money. However, leading up to the housing crash back in 15 years ago, lending institutions took on a much greater risk in both the person and the mortgage product they offered. So that led to a mass default of foreclosures and falling prices. Today, the demand for home ownership is real. Lending standards are not the same. They're much stricter than the current lending standards. So purchasers can't afford the mortgage they're taking out, and this has been verified. So there's little concern about the possible defaults. And if you're worried about the number of people that are still in forbearance, which there's a few people are, well actually there's a lot of people are, you should know that there's no risk that could cause a disruption in the housing market today. So there won't be a flood of foreclosures. And number two, people are not using their home as ATMs like they did in the early 2000s. So when prices were rapidly escalating in the early 2000s, many people thought that it'd never end. So they started borrowing money against the equity in their homes to purchase things like cars, boats, and vacations. And A lot of us are not guilty of that. So, but when prices started to fall, many of these homeowners were underwater, leading some to abandon their homes, and this increased the number of foreclosures. So the latest Home Equity Insight report from CoreLogic, which is another resource that we use, they reveals that homeowners gained $53,300 in home equity over the past year alone. Odetta Kushi, who is the deputy chief economist for First American, he reported that homeownership in quarter 4 in 2021 had an average of $307,000 in equity, which is a historical high. I have clients who have sold their home within the past year, and they have taken hundreds of thousands of equity from their home along with them. So the bottom line is this. The major reason for the housing crash 15 years ago was due to a tsunami of foreclosures. With much stricter mortgage standards and a historical level of home equity that we have today, the fear of massive foreclosing impacting today's market is pretty much not realistic. I'm Denise Watkins. I'm with the Watkins Team RE with Samson Properties. I want to thank you for watching, and I look forward to seeing you on the next video. By the way, don't forget to like, share, comment on my channel. I would love to hear from you. And until then, I will see you next week.